Hello, everybody. My name's Steve Burgess. I'm the founder and director of Compliance Refinery. We provide licensing, governance, risk management, and are advice experts. We work with everybody from Class 1 FAPs to banks. And I will be facilitating today's session, which is life insurance, the CEO strategy session, and a view from the top. We're quite lucky to have such a fantastic panel today. We have Alissa Holz, who's the Senior Vice President and Deputy CEO of Australia and New Zealand with RGA, Lee Mauger, Chief Transformation Architect at PwC, and Michael Weston, the CEO at Partners Life, and Nick Stanhope, the CEO at AIA. If you do have any questions, remember to go into the app and send them through. We'll actively answer those questions or cover those topics as we go through. So please feel free to send them through. I will pass over to Nick, and Nick will just give an introductory statement about what's on his mind at the moment.
Okay, well, that's a big question. Hi, I'm Nick from AIA. We've got 800,000 customers, and our purpose is about healthier, longer, better lives. So that's what we live. I love genetics actually, and it's interesting because I had a test. I know we won't talk about it, but I had a test about 10 years ago, and it was interesting because. And I was with Sovereign at the time in terms of insurer, and they didn't know what to do with it. So I ring up and I say, I've got some DNA material tested and da-da-da-da, which is interesting. But the thing I found was interesting was just the ancestry thing and just following your journey. And I think for a lot of people, they've followed that path and probably got themselves into a little bit of a difficult situation where they need to now think about the implications of doing that. So for me, I think it's a fantastic thing, but a complex issue. In terms of AIA, we're always looking how we can make people healthier and better and enjoy the life that they have. I mean, the genetic conversation is largely about when you may die or when you may develop things which aren't pleasant. For us, it's about making sure that within what the life you have, you can have the healthiest time, you can do the things you want to do the most. And for us, vitality is a really integral part of that. And the reason it's important is because I know that when I have goals, I achieve things. And dreams without goals are just dreams. And so for me, Vitality, which is our program for health and wellness, sets me on a path of being my best me. And for me, that sort of ties nicely into the technology angle and how we might be able to connect people with technology and make insurance relevant to everybody.
Fantastic. I'm Michael Weston. I'm the CEO at Partners Life. At Partners Life, we're about securing a brighter and more secure financial future for Kiwis. And the things that really sit on my mind at the moment about that are relevance and reach. In terms of relevance, the FSC released a stat that I spoke about in my last panel, which I found pretty alarming actually, where 98% of people had protection for their home, 95% of people had protection for their car, but only 20% of people had protection for income in terms of sickness and disability. And so that's the piece that sort of has me thinking a lot about relevance, and reach is the other one. I think New Zealand has quite a healthy appetite for risk, but because of that, there's a level of underpenetration which mirrors the stat that I called out before, and I think that's something which there's an opportunity for us in a collegiate competitive manner to work on as a group.
Okay, thank you. I'm Alissa Holz, Deputy CEO of RGA Australia New Zealand. Everyone's giving their purpose statement. So RGA's purpose statement is to make financial protection accessible to all. And the way we look at this, we look at affordability, accessibility and sustainability. That's really the key focus of what RGA tries to do around the globe. And we look at that through our underwriting and through everything we provide. So we don't work directly with customers, but we know how critical they are as a stakeholder. So it's our job to make sure that we are supporting our clients and supporting the industry to grow.
Thank you. I'm Lee Mauger. I normally preface that with the $6 million man if you are of a certain age. Yes, I'm assured. Exactly right. I'm PwC's Chief Transformation Architect. I work across New Zealand and Southeast Asia. My job is actually great because I do get to sleep at night, and I talk to CEOs who have pressing challenges that we try and help them with. So it's a pretty privileged position. One of the common themes I'm seeing across New Zealand and Southeast Asia, across different parts of financial services, is the pace of regulatory change and the pace of customer expectations change is starting to exceed the pace of change that the technology can keep up with in an organisation. So the nerds among us will talk about technical debt, which is the cost of changing, and also strategic drag, which is the difficulty and challenge in changing your technology platforms as well. So I spend a lot of time helping organisations carve through that to make some strategic benefit whilst meeting short-term things. So can't say I've mastered it completely, but everyone's different.
Fantastic. Thank you very much. Maybe we'll start with Michael on this one, since we started with Nick on the last one. So this touches on what Lee was mentioning. As consumers and potential consumers change, and it feels like the change is so rapid, and become more digitally savvy, but also distracted, how do you connect with them? And I guess I'll give a bit of an example. We're working on a digital advice process with someone, and they went through the process and they said, oh, we really thought young people would complete the process. And they said, the youngest generation, they were the trickiest ones to get to complete it. They had the most anxiety and need their hands held. And that is not something I think most of us think, but that's that we're getting more information very quickly and having to adapt to it.
Yeah, well, that's quite a tough question. Look, I think at Partners Life, by insurance standards, we're a relatively young company, and what that means is that we've got modern, up-to-date technical platforms, and versus what Lee was saying before about technical debt, ours is very low. That positions us quite well to continue to move quite quickly and innovate alongside the industry. And that's something that we're quite proud of as we drive to greater levels of digitisation. And I think that's part of the key on the engagement point, which is you've got to make those processes reachable through your channel of choice. You've got to make them fast and easy to move through and intuitive to move through. And you've got to be able to pick up where you left off. And you need to have a level of design thinking that informs how you do that. Most importantly as well, we need to keep encouraging young advisors to enter into the system, because they're the ones who understand these newer and younger generations and can guide them through the process. And that's something that we really try to do with our new advisor mentoring program. And I think that there's more that we can do in that space to equip new advisors with better digital tools over time and continue to be easier to do business with. And that's a key strategic priority for us. Who wants to go?
Do you want?
I'll jump in. So this is not a challenge unique to New Zealand. Globally, the life insurance industry is struggling to address the issues of different generations, and we're seeing multiple generations, but we're also seeing greater complexity throughout someone's lifespan. People don't now just get married, have kids at 30, and then have a stable life. Sort of, and we all know people. They're having second families. They're going through divorce. They may be putting off having kids. So there is different, unique elements. I think the one challenge that, and I think people are developing products and solutions for the different generations, but one element we haven't considered fully is the impact of cost of living and the concerns of cost of living for the young generation in particular. These are people that need more advice, not less advice, and yet we dig into that they should, they're more digitally aware, therefore it should be a digital solution for them. And I think finding the advisors, as you said, and linking that with a digital experience is the answer to solving the concerns that they actually have around cost of living and others. Helping.
I just reflect on trying to engage my children, actually, and this problem is I've tried emails, they don't reply to emails. I've tried WhatsApp, that worked for a little bit, and now it's like, nah.
Have you tried TikTok?
Tick what? This is the problem here. No, I think one thing to bear in mind is the expectations of clients aren't necessarily being set by the industry or even your competitors. You've got the likes of Google, Apple, they're driving expectations in the industry, right? Which is they have potentially slightly larger budgets to drive experiences, and that is driving our customers to want similar things. I think there are some things you can do, though, is we can start looking further out in our strategies about seeing what's coming and what the inhibitors are. We can start looking at some of the regulatory impacts around the world. So I spend quite a bit of time at the moment talking to organisations about CDR and how that might impact their industry as it comes through, and if they're ready for that, because there's a multi-year program sometimes behind that. So lots of challenges.
Just before Nick jumps in, the iPad or Surface has run out of batteries. So although we've been encouraging you, I don't know if somebody's got a battery or can get it reset. Although we've been encouraging you to use the app, and you've been great at that, maybe I'll pass it off and we'll get it sorted.
Perfect. So look, I mean, obviously we're a very we're an old company. We've been in business since the late 1800s, so we've had to evolve and to be relevant to all our consumers, and we've done a good job. Otherwise, we wouldn't be here. I think for us, the centre of it is know your customer and understand what your customer wants. And I think about, for me, I've got two beautiful daughters, Sophie and Laura. Their experience in terms of what they want to do as a consumer is very different to mine. They buy literally everything online. My front doorstep is literally a UPS parcel depot, and that's their world, right? So we need to be relevant to them. We've tried stuff in that space. We are blessed with Salesforce as a platform, which is a consumer-friendly platform, and so we need to try and connect with the sales journey, as you talked about, but some things need to change for that to be relevant. The products we currently sell are complex, and they need advice, and as such, for us, part of the technology journey is to make sure that advisors have the best tools they possibly can. And I think there wasn't too much that was good out of COVID, but pushing us to evolve and to make our e-app relevant, to have an experience where consumers and advisors can collaborate remotely was really important. But getting back to Sophie and Laura, for me, their first journey in our industry was when they had the wisdom teeth out. And the health insurance kicked in, and it was like, whoa, that was pretty cool. What else can I have? Now, Dad's paying for it, of course. How can we evolve products that would be relevant, suitable to a 21 and a 23-year-old that gets them in a path that they understand what we're about? And one of my big bugbears in this industry is the lack of education that comes out of schools, that is provided by government, so people understand the risk profile of their personal well-being, their body, as opposed to their assets. So I think there's a lot we can do there. We can make any product that we want, but you've got to sell it, right? And we need to make it a product that can be done economically as well. So a lot of what we try to do is to be customer-centric. I think Apple is a great example where they are fortunate that they have fantastic data. For us, the way I think to be relevant to a broad number of people is through Vitality and our Vitality app. I've always challenged Swiss Re, if they're still here, the amount of data that you can get off your watch onto your phone is insane. Respiratory data, mobility data, heart data, and so at some point we'll be able to modernise the way that we look at risk, and so that an individual can literally go on, look at life cover. I think let's forget genetics for a minute, and then just look at are there a good risk, right? Because all that information is real time with great history. Now, I don't have a huge history with wearables, but my daughters have worn those things all their lives, largely. So we've got fantastic information. So immediate execution of a transaction, because the generation of Sophie and Laura, they're not patient, and they want to get things done quickly. So I think a little bit of a change in the way that we sell things, a little bit of a change in the way that we make things, and always having the consumer at the heart of what we think and what we do.
Yeah, I think Nick's really right, and one of the worst things that we can do is spend a lot of time and effort on non-differentiating services. And that's really, again, one of the things that COVID gave us, which was a rapid acceleration of digitisation. People's expectations around simple things like change of address is it occurs simply online anytime, and that doesn't differentiate anyone anymore. Apple does it, Google does it, Netflix does it, we need to do it as well. It's really got to be around the claims and the underwriting experience, and there needs to be an emotional layer to accompany some of the great data that we're getting as we move through those processes, because they're very, very human processes.
Fantastic, thank you very much. And speaking of wearables, I noticed you're wearing a Whoop. In terms of, this has come up, we had a session yesterday afternoon, and we've had a session, it's come up today as well, but innovations in products and adapting products to, you've spoken about the younger generation and being involved and the distribution method. Generally, in terms of that distribution method, financial advisors are often not targeting younger people because they don't have assets and they're not moving through that life stage, which is kind of an issue with that. But in terms of innovation of products and changing products, how do you see products changing in the next few years? Will they be able to grow with a client as they become more complex?
Look, I think firstly, what we provide to the market at the moment resonates with healthier and wealthier people. And that's really problematic in a country which is not entirely that. We know health outcomes in New Zealand are really, really difficult. We know the public health system's struggling. And I've had this conversation with the FMA, and my general counsel is very familiar with it, Jackie, is how can we get back to having some degree of pooled risk, where we can look at pools of people and accept risk as opposed to individual underwriting. In Australia, they do it obviously with group. But there needs to be a way that life insurance is affordable and people can actually get it across all New Zealanders. And so for us, the GA product world disappeared through regulatory change for lots of reasons. Pre-existing condition, exclusions, etc. disappeared. I think there's an argument to say that we need to get back to pooled risk. Countries like South Africa have done it well, zero rating in the health sector, etc., so that everybody can have some degree of benefit from anything other than the public health system. Now, I think Australia's done a great job with taxation benefits, with Medicare, and one of the things that we find frustrating in New Zealand is if you provide a group scheme, the employer has to pay fringe benefit tax, which is 46%, which is huge, right? So why would you disincent employers to provide healthcare to their employees? And so I think there's some structural things. I know David Seymour's here this afternoon. I'll have a chance to have a chat to him about that again. But so I think some structural things to do within the government, because they aren't coping in the public health sector. Lester Levy's trying really hard to take a lot of cost out of that market. Good luck to him, and I hope he achieves it. But actually, we need to have a way that we can collaborate, and that's part financial, but also recognising that every human being in this country deserves to have some degree of protection. And how do we do that in a different way? Because if we try and do what we're doing now, and we've been doing it for a long time, we're not going to get above the 20-30% market share that we currently have.
Yeah, I think that's very well said. I mean, I think one of the things that we need to do is continue to work on simplifying our policy wording and trying to make products more accessible. We estimate that there's about 2.9 million financially active Kiwis, but of that, probably only about 30% are really being addressed today. And a big part of that is the complexity of product, the complexity of underwriting. And so we've got to work as an industry and also with the reinsurers on solutions that can open up the funnel in that space. And we've also got to work where consumers want to be and with what they understand. And a really obvious area, and it's sort of getting back to that initial comment I made, is around mortgages, right? And really understanding your risk profile as a personal balance sheet, and making sure that you're providing, or that you're able to provide yourself with a level of insurance commensurate with the risk profile that you've taken in relation to a mortgage. And that seems to be something that all New Zealanders, for good or for bad, understand, and seems like a quite a likely start point.
So my thoughts go to a couple of places. One, there's huge amounts of innovation happening globally around products every day. The themes around them tend to be wellness products, or you see products targeted at certain groups of individuals, going back to your pooling, and whether that be diabetics, whether that be people who've already had cancer, whether that be people who mental health might be the next sort of thing that I think we have to address anyway. How do you cope with this sort of big pool of individuals? So we're seeing a lot of that happening. We're also seeing the data and the personalisation through digitisation, and companies trying to work out how they can make their products more pick and choose. And that requires your systems and everything to be able to manage that, because we don't want legacy issues. So I think there's a huge number of innovations happening around the world. I know there's a huge number because it's exhausting to try and keep up with it. But then when I look to New Zealand, I think there's equally a lot of excitement in New Zealand and in what you have here that is unique. I think to things around business owners and products that you have sort of targeted for farmers and other places. New Zealand is quite an innovative country in terms of its products. So I think you should take a lot of sort of comfort from that and a lot of, I guess, pride from that, because you're in a really good place to keep pushing forward with that.
Just picking up on the education theme, I think there's opportunity. If I think back to when I was in the UK before I came to New Zealand, all the banks clamoured for kids to open their first bank accounts, right? So they could help them learn really good saving habits and really get that brand loyalty. I've still got my Midland Bank, Griffin Saver, dictionary, pencil case, all that sort of stuff. So there's, people from the UK swap notes on who's still got theirs. I think there's opportunity for a wide range of financial services companies to help reaching out a little bit younger and start setting some of those habits and getting healthier customers at the end, which is always good.
Alissa, we've got a question that you might want to start with. How does the panel see the roles of the reinsurer alongside the insurer in working through remediating customers, given sharing of premiums?
Okay. Well, without knowing the specifics, I'll start with we look at specifics, but generally we're all in this industry together. And RGA takes a view that we are in this industry together. If we've known about things, if we've worked developing whatever it is, then we're here to support and to take it forward. But I think it would depend on what's happened.
Okay. Lee, maybe I'll pass this one over to you. In terms of technology infrastructure change, there are certainly some product providers that are famous for having multiple legacy systems. It was quite funny. I popped into one of the breakfast sessions this morning, the fintech session, and some guy was up there talking about, and he said, you've got 6 different systems and 100 different passwords, and then you go in and you look in the first page of their notebook and they've got 17 passwords written down, and it's so complex and it takes forever to deal with anybody, and there's tons of mistakes made. What do you see internationally in some of the projects you've worked on, and how are those flowing down into the New Zealand market?
Yeah, so good. We have those challenges in New Zealand. The client I'm working with just yesterday has got, I think, 540 systems. So I'm not sure if that's a world record, but it's kind of certainly up there. I think the challenge I'm seeing is you need a way of going from where you are to your target state, right? There's a lot of focus on where you'd like to get to. That's not actually your hardest problem to solve, right? Figuring out where you'd like to be is not too hard. It's enabling your organisation to go through a sequence of steps that'll let you get there. One of the challenges I'm seeing with some of the sort of more interactive, customer-focused requirements that are coming, I'm seeing organisations kind of sticky taping and stringing that onto their existing systems, and that is providing a legacy system that's very hard to change going forwards. I'm seeing newer organisations starting on what we call greenfield sort of platforms, and they keep themselves up to date as you go. So Salesforce is a really good example that was mentioned today, right? if you're competing against an organisation that doesn't have to worry about those sort of challenges, it's very hard for you to keep up. So there's that balance between, do I do short-term fixes or do I plan for the future and make it come through? I think some other challenges that come through, CDR I mentioned before, it's top of mind for me at the moment, because if you have 540 different systems and you need to give a customer an idea of what information you hold about them, that becomes very, very challenging to do. I think the trend coming is greater transparency for the client to be able to see what information you hold on them and what you've got, and that is normally you can paper over some cracks internally with staff. Some of this regulation is meaning that's not going to be effective anymore, and some cleansing will be required before we go.
Yeah, and just a bit of a follow-up question before we pass along on that. What are some of the risks as in terms of the New Zealand market, in terms of some are moving quicker than others?
Yeah, good question. I think some of the risks are actually, some of the really interesting parts I see is, and we've had a chat with some fintechs here about how they're exploring the market as well. Some of these open interfacing and open banking and open interfaces that are coming through are going to enable them to start disintermediating and interacting in some of the organisations. So I think that's one of the big risks that we see coming through if organisations aren't able to move quickly enough to keep that customer value proposition directly.
Yeah. Okay. Do you want to pass along, and you guys can maybe talk through the technology?
Yeah, look, I think, and it's a little bit similar to my answer earlier. In terms of technology, number one, you need to make sure that you provision for maintenance spend, right? A lot of legacy technology just means that you're not maintaining your systems. And I think, you've got to have a real commitment to that, and that's something that we certainly have. I think the other part is then keeping pace with changes in technology and new requirements that come from a customer perspective, and understanding whether those are genuinely differentiating and therefore you should own, or understanding whether these are going to be generic and can be done as a part of a platform as a service, as an example, like a Salesforce or other types of systems. In terms of risks, I think you're right. There's that disintermediation piece. I think the things that probably keep me up at night are probably more around privacy, cyber, and data provenance. As we spend more and more of our time online, more and more of our sensitive personal information is online. We've got to make sure that that's properly protected. Our industry is an industry that's built on trust, and that flows through not just into claims expectations, but it flows through into how your sensitive data is going to be treated. And I think that's at the core of a lot of the discussions that I've heard today.
Yeah, I mean, all of that I agree with too. Look, I think for me the tilt is AI. We're a complex business. We are, policies, you've talked about it, Michael. For us, AI is a great tool to help our people, to have great service with customers when they get quite complicated questions, particularly if they've been on policies that could be, maybe 3 generations old. And equally for customers to be able to get great outcomes. Copilot type technology within our Salesforce platform gives us the ability to be able to understand passbacks, for example, very quickly, so that someone's looking at a policy, not sure whether it's covered. Bracket would be a good example, and straight away they can get a recommendation made to them. We're not going to jump into the AI pit lock, stock and barrel, because you've got to have confidence in the machine to do something which you really want to be really, really comfortable that you're giving something that is completely accurate. So I think for us, to the whole conversation around complexity in our business, we are a complex business, and we have 800,000 customers, and they're each unique. So for us, things like Salesforce AI, Gen AI, Predictive AI are great platform tools that we have enabled now, and it's for us really to understand what the customer wants by coming back to that customer-centric view of our business.
And just in terms of AI, if you don't mind, because you said you guys have kind of jumped into it, do you have any type of metric of how much more efficient that's made you, or at this point? I know it's very early in the
I
process.
think, to be fair, we've taken a really cautious approach in terms of, firstly, enablement on our platforms. We just put in Genesis, which has that capability, integrates with Salesforce. And so for us, largely you need, the biggest thing with AI is taking people on the journey. It's not a frightening thing. It's not a competitor. It's a complementary technology to what they do. So for us, making sure that they come with us, and so there's collaboration. I mean, when you consider, for example, underwriting. Before the STP engines of the world, we had a lot of underwriters, and now, most companies are getting STP rates, 20s or 30s, and so it's fundamentally changed the world for underwriters. And so, how do we use underwriters in a different way, and how do we look at STP rates and what the implications of that are? So, technology is here to stay. What we need to understand is that, how that will help the customer, but also how do we reshape our workforce to deal with a technology which may help them advance and go into more sophisticated parts of the organisation, which before may not have been on their mind.
Mm-hmm. And I guess maybe we can continue on that theme. And I was just going to make a comment, because we deal with a lot of financial advisor businesses. I've actually been a little bit surprised how quickly they've implemented different parts of AI. And I think there was initially a chat about, privacy and not privacy, and how do you do this? And it seems like it's almost like it's just the horse is bolted now kind of thing. You can't put the toothpaste back in the tube. And there's so many people using it, and you're just like, oh, wow. It's almost like just a commonly used tool in a lot of businesses now. But yeah, if you want to talk about what your plans are.
Look, I think with AI, there's many different flavours. And I think many of us have been using things like machine learning for significant periods of time. There is rules-based decisioning, which we have in auto underwriting, and we've all seen quite significant efficiency gains, whether that's straight through processing or other mechanisms that are shortening turnaround times, and often significant. And underwriting's a case of that, where there are cases now where that occurs instantaneously, effectively, which is a vast change from a few years ago. And that's only just keeping up with customer expectations too, to Nick's point. I think where it starts to get interesting is on this next generation of AI, and I think what we're seeing with generative AI is probably more the tip of the iceberg, and the key use case for that at the moment is summarisation, and where that can have efficiencies. I think we are also being cautious on, but we see the ability for that to be used to summarise things like call centre scripts and learning, so that you can accelerate answers for customers and reduce TAT on phones. But the other impact that has is massively reducing training time for complex types of inquiries. And so we're generally quite excited about that. But similar to Nick, we're taking quite a cautious approach. We think data provenance is really important, and knowing how data is being treated, making sure that disclosures about usage and fair usage are all appropriate. And so we'll be quite measured in that, but that doesn't stop a lot of internal experimentation. And we are quite a restless company, and we are often striving to the best way to use new tools. And I'm excited about where that goes beyond summarisation into decisioning next, and how that can support both customers and operators inside the business to deliver a greater customer experience in the long term.
Do you have a prediction on when AI underwriting might be used?
Well, I'll hand over to Alissa for that, because
that's good.
My understanding is it already is, but the global use cases are probably what we should all be tracking.
Yeah, so I think it is already being used, but it's being used at this point mostly for accepts straight through accepts. I still think you actually want a person, particularly if you're declining a case, but potentially if you're loading a case, I think you want an actual human being to have that communication. We want that, from our perspective, to have that communication to our clients. So someone needs to understand what it's doing. So from our perspective, AI helps our underwriters actually do what they're paid for, and actually, because what they're paid for is analysing the outcomes. They're not paid to read pages of documents. We also see it in claims, and the usage in claims, summarising the various claims information and getting it to a point where a claims manager can actually think about what is the claims strategy for this individual. So I don't think it replaces people. I think it lets people do what they're actually good at, which is the emotional intelligence and the understanding that human beings are actually complicated and anyone's health outcomes are actually complicated. So that's how we see it. So we see it as a benefit and a speed issue, as you said, but changes how we engage with clients.
Yeah, fantastic. And Lee?
Yeah, PwC's taken AI pretty seriously. We see it as the industrial revolution for knowledge workers, of which that's our core business. So we felt we should do AI to ourselves before we go and help advise anyone else how to do it. So PwC has spent $1 billion over the last year and a bit setting up what we call Chat PwC. Just to break down that $1 billion a little bit, a third of it was on technology, a third of it was on understanding the risk profile, governance, and how to do it safely, and a third of that was actually enabling our staff to use it effectively and get the most out of it. So quite a journey we've been on. I think New Zealand still holds the record in the whole PwC group for the highest use of Chat PwC globally, which is over 80% of people using it daily to help them do their jobs. So in terms of, it's an optional thing, so if it wasn't helping them, they wouldn't be using it. So it's been pretty remarkable for us in helping us in our job.
Yeah, fantastic. And maybe, Alissa, we'll start off with you on this one. This is a question from the crowd. Considering things such as tech costs, alignment of approach, cost base, et cetera, is there too many providers in the New Zealand market? Is there not enough? Does it kind of, how does that work with maybe other jurisdictions? Because I think there is also rumors that you guys are about to get a few more friends in the market. But yes.
I guess I'd start with a couple of points. One, if the insurance market grows, then you can have more players. So let's all aim to grow the number of people insured. That's our number one focus, and I hope that's the number one focus of everyone. So if the number of policyholders are increasing, then it's not an issue. I do think, if I go back to one of our core tenets of affordability, there is an issue around scale across the globe and how we manage the costs of regulation, how we manage the costs of technology, and still have an affordable product that consumers can buy. And I think that is a balancing act. And we talked about data and how much data you actually want, and we've been challenging ourselves of, can we get away with less data? Can we have less cyber risk rather than more data? Like, everyone's going down the more data path, but more data path comes with an expense overlay. So I don't know that I'm not going to talk about how many players there are in the market. I will say that regulation and technology is a cost burden, and therefore that needs to be addressed in whichever way your business can address that. And then let's just sell more policies and have more New Zealanders insured.
Fantastic. Maybe you can pass to Michael, and I'll just start off with that. You brought up regulation. I don't think there's anybody from the FMA in here. Oh, fantastic. In terms of regulation, we've heard a number of times that, it's too complex and this and that kind of thing. And you've, I think, just come back into the country. So can you guys, I guess, speak to how you engage with regulators, what that relationship is like? And we probably won't ask you if you have any pain points or anything like that. But just maybe speak to, in general, if you do find it too overly complex.
Well, let me perhaps start just with the prior question as well. Maybe speaking for Nick, but I think on a collegiate basis we love competition, right? I think it drives better outcomes for everybody. It's got to be about growing the size of the pie, to Alissa's point, but it drives better outcomes for customers in terms of choice. It drives better outcomes in terms of competitiveness, and it drives innovation, and that's been the subject of a lot of what we've said today. So, we welcome collegiate and classy competition. In terms of regulation, I think what I'm getting used to is I've come from environments where there's a single regulator, and obviously there are multiple regulators here, and that's something which, from my perspective, we need to see coordination in terms of how we build strength and trust in the industry. The dialogue is very good and very, very open, and I think that's one of the strengths that New Zealand has actually relative to other markets that I've worked in, where sometimes those relationships can be quite a bit tougher. I think it's a consultative approach, and that's one that I really appreciate, and it's one where I think we're all clearly striving for the right customer outcomes in the long term. And so, for me, I'm still getting to know the prudential and the conduct settings, but what I've seen so far has been, a very open and honest dialogue that's driven towards building trust, and I think that's a really good thing.
Yeah, I mean, similar. Look, competition's a good thing, and particularly when you think about New Zealand, small country, Investment, Daiichi, and AIA, they're big companies, and they're bringing in capital, not just not money, but intellectual property, which will benefit New Zealanders. So, having a strong sector is really important. And actually, the opposite's on my mind. We want to have a strong sector with players in it, as opposed to a shrinking sector, which is really important for the industry as well. I'm also a golfer, right? When I'm playing golf, all I think about is my own game. I just really don't care if I'm playing with you, Michael, how you're going. It's about me. So, so you got to play your own game and focus on that. In terms of regulations, look, I think chapeau to the regulators. I think they looked at Australia, and I think there's some lessons learned from Australia in terms of where you should not go and where you should. So it's a good balance in terms of providing good consumer outcomes, but also making sure that we as large companies do what we're supposed to do as well. So on that side of it, I think also with the government, I was involved on a working committee with Andrew Bailey. The thing that, in terms of the work on areas, which I'm really happy to talk about, there was a degree of blurring between some of the authorities, the Commerce Commission, the FMA, the Reserve Bank, etc. So I think what the national government's done really well, I'm not wearing a blue tie, no, I'm wearing a blue suit though, was actually just clarify the boundaries a little bit and get back to, kind of core responsibilities, which for us made it a little bit easier for us to understand remits and not getting cross-functional regulation, which makes it more difficult for us to operate. So well done to National in their very short period in government.
Fantastic. I will throw this question out from the audience as well. Are you positioning yourself to leverage the benefits of open banking to provide a better solution to the market?
Well, look, I think to the earlier conversation about competition, it's a good consumer outcome. I look at the telco sector; it's extremely easy to move your mobile phone. I'd be very nervous about moving my banking relationship now. The amount of work to do that would be significant. How we connect with that, it would be interesting. We obviously have a large bank assurance partner with ASB, who we have a very close relationship. I think I just need to understand how it might evolve and how consumers might behave, and then we can look at how we might be able to to be part of that journey. At this point, really haven't formed too many views on how it might impact life insurance.
Yeah, I think similarly, we've got a great bank assurance partner with BNZ, and so we need to work with them and stay aware of how this is going to come about. But I see open banking just as part of a broader trend towards ecosystems and an open API economy. And I think with regards to what we were talking about before with reaching consumers and advisors, because the same sort of technology applies for things like advisor CRM systems. We need to be where our customers are, whether that's B2C or B2B relationships. And what I hope is that as this emerges and the regulation and the bill firms up, that it sets alight the ability for us to all innovate in this space, to be able to meet customers and businesses where they are in new and different ways. And for me, that's an exciting opportunity.
Keep going. Look, I think from our perspective, it comes back to there's certainly information that the banks hold that we think would be useful in assisting in the underwriting process and writing policies and making that faster and easier for customers. But then you're getting more data. The banks don't really want to give it. The customers need to be aware that they're giving it. So there could be opportunities, but again, you'll have to understand what does a customer want from this, and whether they see them as two separate decisions in their life.
I think open banking is really just a bit of an icebreaker for where things are going. I think that concept is going to get applied to a lot of other industries. So it's worth, in all areas of financial services, I think it's worth thinking about what might we be asked to do. Consumer data right, I mentioned before, is a really important thing. I don't see that just as a banking thing. That's going to apply much more generally across the whole organisation. And then sometimes I'm helping CEOs look further than the regulatory horizon and what else might come down, particularly with breaking up the potentially disintermediating the value chain, with organisations being able to use your services through APIs and build their own intermediaries. So quite a fascinating world we've got coming up of startups, fintechs and existing organisations, and I can't quite tell you where it's going to go other than it's going to be faster and more disruptive than we've had before.
Fantastic. So we have 10 minutes left, so maybe I'll just ask you as a quick question, and then maybe if we have time for one last more. There's a couple of questions in here along the themes of give yourself a 10-year outlook. What are the biggest risks you see, and what does the industry look like for you then?
I'll start. My biggest concern is being stuck on technology from yesterday in a fast-moving market when my competitors are on more agile platforms. That for me is such a big inhibitor. It kind of forces you into a position where you have to completely reinvent your whole foundations of your organisation to be able to go forward.
So was 10-year horizon and the biggest risk, was that the issue? I think the biggest risk is growth or lack of growth. It's the thing that concerns me the most around the world. So we look to Japan has about a 1% increase over the last year of insurance. US has 3. I think New Zealand was about 3, which isn't keeping in pace with inflation. So when you have an industry that is not growing in line with inflation even, that is a concern, because we all have our expenses and our regulation and everything else that is dragging us down. So we need to address how we bring new customers into this market.
And there'll probably be a bit of Greek chorusing along the way here. Back to probably my initial point, I think the biggest risk is relevance. And the good news is, that's why we're all here, right? That's something that we can work together on in a collegiate but competitive way to drive those better outcomes for the customer. 10 years is a long time. For me, I think it's really about having those simplified products that we're talking about that are really able to be where the customer is, whether that's a B2C, B2B type relationship as those things emerge. I think AI is going to play a key role in driving decisioning, as I said earlier. And the thing that we've got to do is stay adaptive and all work together in terms of growing the size of the pie and remaining relevant to customers in the long term.
Look, for me, I think it's the health of this country. It's alarming. 200,000 diabetics. I mean, I can't even remember, what a diabetic was when I was growing up. It was quite a rare affliction. Type 1, yeah, but type 2, to have the population of Hamilton with diabetes is sad. And BMI and just general health conditions across the country. I mean, every insurer at the moment is struggling with medical claims, mental health. We're getting hammered, Southern Cross, and my partners in NIB as well. The public health system's getting hammered as well and struggling to deal with it. We're not a healthy country, and we provide health services to consumers. So unless we address the fundamental issue of health, it's not just a private conversation, it's a public and private conversation. Then we won't have an industry because we won't be able to afford to provide premiums, and people won't be able to afford to pay for them, and that's huge. I don't know how you deal with it, but it's something which it's in my opinion a crisis level, and human beings shouldn't be as sick as this. There's no reason for it. They should be able to understand what are good health habits. We have our own program to do that, but the government also has a role in making sure that children learn about good nutritional habits, that parents have the ability to look after their children and to be able to educate them as well. So it's a big thing, but if anybody doesn't believe that we don't have a material health issue in this country, then I think go to Middlemore Hospital and walk around and have a look at who's outside it. It's really frightening.
Yeah. You can keep it. We've got 5 minutes left, so I'll ask one more question. And I guess I'll kind of swing it around a little bit internally for your systems and processes, because we have had, domestically in New Zealand, there's been a couple of instances where, say, customer wait times, customer service times have pushed out. And I think those are partially due to IT infrastructure projects, and then also potentially not having the right skill sets available. We've kind of talked through some of the technology space, but what's your approach, I guess, to marrying those technology changes with building skill sets and making sure you have the right skill sets in periods where we are seeing a significant demand in some product lines?
Look, it was a point in time where you shut the borders and you had a lack of supply of people to do a role, which created a really difficult situation for any contact centre. So I think to me, self-service is great service if it's done well. But we're not banks, so people don't deal with us every day, and so we need to work out how we can be relevant, and so we don't have this perpetual what's my password, what's my log-on name, because I'm making a claim, I haven't done that in 3 years. So our approach to that is with our Vitality app, which is an everyday experience where you can do a lot, understand your health and your wellness, and in time we'll be able to give information on their relationship with us. But self-service has to be the way that addresses the problem. Otherwise you're always going to be dealing with peaks and troughs, and AI will be helpful to a point. But as we've talked about already, there's a huge leap of faith to have complete comfort in AI. And I'll give you a story, actually, which my group chief executive, who used to run Ping An Life in China. So they put out AI into their contact centre chat agents across China. And Ping An is a big company, and obviously China's a big place. So the AI agent was instructed to try and understand how it can make the customer happy, and it was looking at facial recognition to deal with that. And by the way, they record that and as well. They'll understand your personality by your facial types in China. But anyway, the AI agent worked out that jokes were a good way of trying to engage and to create a relationship with the customer. But it also worked out that dirty jokes were even better. And so, uncontrolled, they started telling dirty jokes, and a lot of them. And it became a massive issue. And the regulator in China is quite stringent. So they turned it off, and it was a great lesson. A good idea, but it's an example where a good idea can turn bad pretty quickly unless it's managed carefully.
Can you follow that up, Michael?
Yeah, I know, that's what I was just thinking.
Any dirty jokes coming?
No, look, I think it's similar, right? That not on the dirty jokes point. For us, it's use of technology to get people onto the value-adding services rather than on processing services which are labour-intensive and not fulfilling. Because when you get people onto those tasks that are fulfilling, that have an emotional attachment, that's when you're able to deliver that great service. And so it's about a balanced use of technology to do that, but also understanding that you are going to have surge periods, and there are circumstances, like Nick said, that are sometimes outside of your control that contribute to that. And I think they're the occasions where you have to be transparent and actually talk to your customers about some of the challenges you have as a business and why those things are occurring. Because in the end, a lot of servicing is about expectation management, and again, that's something that has got to be human and emotive.
Yeah, I think we're in a similar situation. We only have two sort of assets. We have our people and we have our bank account. That's what a reinsurer is, and our people are core to that. So getting the right people and making sure that they're engaged is critical to our business, because they're critical to our service that we provide to our clients. And keeping them engaged on work that is valuable. When we have surge issues, we're very lucky that our clients tend to be very understanding, but we also have the benefits of being able to pull from global, but getting people who, we talked about education before, getting people who know this industry and know how to work in these markets is actually still a challenge. So.
I think AI is causing a bit of a challenge for career selection for our young people. I'm seeing a lot of, if you assume we're at the peak of inflated expectations, I think they call it in the Gartner cycle, a lot of kids today are going, well, that job's not going to exist in the future, therefore I'm not going to engage in it. I think that's going to be a bit of a problem as we get to a more real view on what AI is going to do and not do. So I think we may be in risk of having a bit of a gap flowing through the system of the next few years of kids being put off coding, for example, development, technology, that sort of thing. So I think that's one of the things we need to address and move forward on.
It is a bit daunting when I think about what my kids will do. Yes. But we're on time. We're perfectly on time. So can everybody join me in thanking the panel? Fantastic session. Great job, everybody.